All right, so Kelly, over the course of the past couple of weeks, every time there's been immense selling pressure in the market, you have seen some of the bigger exchange-traded funds really dislocate from the market. And this is an interesting point here. The reason why ETFs have been under such immense pressure is because some of them have been sold off so aggressively that they at one point in the sell-offs were actually worth less than the value of the portfolios themselves. That dislocation is something called discount to net asset value. It's basically a fancy way of saying these ETFs were basically trading at less than the actual value of the assets in the actual portfolio. It happened a lot more in bond-related funds, credit-related funds, international country funds, and commodity funds as well. Here's two examples. One of them is the Vanek Vector's high-yield municipal debt fund. At one point, you can see there the sharp sell-off in shares. Take a look at this chart courtesy of the folks at Y Charts. Their data shows that at one point, this thing traded at about 28% below the value of the actual assets. One of the other examples to watch is the iShares India ETF, the ticker INDA. You can see there a sharp sell-off, yes, in the stock, but take a look at this. At one point, this thing traded about 8% below where its actual portfolio was before rebounding. Very big divergences, and again, that created some opportunities, Kelly, for investors to capitalize. But in the event of another downturn, these types of ETFs could be under immense stress again.
Dom, those are more of the kind of, I don't want to say esoteric, but what about the broad ETFs? And any sign that that kind of passive money is causing stock swings both to the up or downside?
Sure. In some of the larger, very big, passively traded index tracking ETFs for things like the S&P 500 or the Russell 1000, typically those portfolios don't trade very differently than the underlying ETF price. But in some of the cases over the past couple of weeks, even those liquid, very traded ETFs dropped to very big historical lows against some of where they trade normally. So it's not just the esoteric ETFs, although that's where the most stress was found. Even some of the more liquid ETFs that track big cap stocks were the ones that felt big hits as well.